Good evening and welcome to the Australian Stock Market Show. Well, the sellers finally stepped in last week to push the All Ordinaries Index down by over 1%. So, where to from here? Well, stay tuned as we discuss our thoughts on that shortly. We'll also take a look at an RRG chart, and for our main topic in tonight's show, we get into the top 3 bank stocks to buy now. Is the best bank ANZ, CBA, NAB, or is it Westpac? First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Pinnacle Investments, Steadfast Group, Westpac, an RRG chart of the consumer discretionary sector and more. So get comfortable as we'll get into those soon. I'm Dale Gilliam, I'm your host for tonight, and joining me are two of our team of highly experienced analysts and professional traders, Janine Cox and Philip Tortevsky. And together we're Australia's most trusted stock market educators. Good evening, team. How are you?
Great, thank you. So much better than last week.
Oh, I'm glad. Well, I'm going to say I was glad you got your voice back, but I'll wait till the end of the show before I decide that, eh? How you doing, Phil?
Yeah, good. I'm extra glad now because last week I lost my voice after all that.
A lot of pressure.
Carrying all the load, but you're back.
You lost your voice.
But you're back with a vengeance anyway.
You wouldn't lose it even if you were underwater, would you?
No.
All right, well, tonight, as mentioned, we do get into an RRG chart of the consumer discretionary sector. But first, let's take a look at this week's hot stock tip. Phil, you've got a ripper for us tonight, haven't you?
Yes, interesting stock tonight. The hot stock tip for tonight is QBE Insurance Group, code QBE. So let's get straight into it. On your screen now is themarketindex.com. And you will see QBE Insurance Group is involved in underwriting general insurance and reinsurance risks management of the Lloyd's Syndicate Investment Management. So basically an insurer in the financial services sector. It does have a 2024 year-to-date performance of positive 19%, which is absolutely fantastic. Its one-year return is positive 11% versus the sector, which is performing in the red. So outperforming that, which is quite nice, and also outperforming the ASX 200 on a one-year basis, which is doing positive 4.6. Now, this stock has a market cap of over 26 billion, so huge market cap there, and it is ranked within the top 20. It's ranked 18 right now, so it is a big stock on our market, one of the more known ones on there. Now, let's go to the chart and have a look for you. I want to start on the monthly chart, and there are a few things I've marked up, but the most significant things I want to start off with, and that is this particular level at $14.50. This level, I mean, it doesn't take, as a rocket scientist to work out that this stock has been trying to get through $14.60 for the best part of, 10 years, since November 2011. These arrows represent each time it's had attempts at it with failure, but what it's done in the process is accumulate in this big sideways period. And we often find, or we like to see when stocks, when they perform or come off these big falls, they generally come into these accumulation periods before then resuming into the next expansion phase, which that in itself is very exciting, considering last week's show we spoke about those Dow phases of the cycle and how this is a picture perfect image of that. But I want to hone in on this particular pink box as well, because why this is so important this time and why the dynamics have changed for me is because each previous occasion where it did touch $14.50, you can see how fast price got rejected. It fell back very quickly, but in the most recent time, it has based out, and I guess buyers and sellers have agreed that $14 or $14.50 is being accepted by the way this price formation has happened, going sideways. And what we've had is a nice break up through that level, which now it's very evident the buyers are in control here. We're in a nice medium-term uptrend. And now, given we are in that uptrend, it's just a matter of trying to identify, I guess where to from here, which I've got this blue level marked, which I think could be the next level of resistance potential for this stock. But also keeping in mind these momentum lines that we've got drawn. And if we go back to this particular period back in 2002-3, the stock was running on this angle through here, which is about 65 odd degrees, before really expanding to that next gradient. And that's where we really saw the strongest move. Now, what's quite interesting is that right now, this particular move is also at around 61 degrees, but if we can find a base through here and start rising up, it's giving us confirmation that the trend is expanding. And it is expanding very similar to how it did back in that period to 74 degrees. So I think, Dale, with an expansion of trend, breakout, there are a lot of things going for this stock. So if it's on your watch list, get ready, because you might have an opportunity very, very soon.
Do you want to say something before we wrap up?
Look, it's an insurance stock.
I know
so
you were patient. But
I know that you used to love this stock.
I used to love this
a long time ago
stock,
when it was
yeah.
a trending stock, and then it just became a dog stock, didn't it?
15 years
For a long
going
time.
down and sideways. Not a great... I used to trade it before it did all of that. But
Well,
yeah, a bit of a
the
dog
board lost a lot of trust during that decline, and there was all sorts of things going on. Now, maybe it's through all of that.
I think it looks like it's changed the corner, so I think it's a great stock pick, especially for those with self-managed super funds and good blue chip portfolios. So I think it'll do well over the next few years anyway. Well, that is it for our weekly hot stock tip. Now, shortly, we're going to get into our topic for the night, but before we do, right now is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 929 09988, or you can text the question or your question to the number on your screen. Now, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So pick up your phone and dial 03 929 09988. Now, while you do that, tonight we'll give you our thoughts on an RRG chart of the consumer discretionary sector. So let's get into it.
On your screen right now is an RRG graph, as Dale said, of the top 20 consumer discretionary stocks by market capitalisation. Now, this looks really interesting at the moment because we've seen so many of these consumer discretionary stocks take off. Aristocrat Leisure, JB Hi-Fi, there's Harvey Norman up the top there. There's a lot of big names up the top right now. But down in this bottom section, maybe the unloved shares of this sector, in the obviously top 20 by market cap, could have a turnaround, but not yet. We're not seeing, like a lot of the areas of the red of the RRG, where we look at some of the stocks that are in this area, often you'll see at least a few that have already started turning around and moving towards that improving area. But at this point, we're seeing, it's nothing really exciting. TLC started to sort of move up a little bit, so I thought we might take a look at that shortly. But a lot of these other stocks up here doesn't mean that they're not going to be opportunities again soon. They could very well be, in the next 6 months, provide good opportunities to trade those shares. But what it's showing is right now, the unloved ones that could be the best opportunities down the track. So why don't we just have a look at TLC to see where it is at the moment, give it a bit of TLC. Now, not a lot of people are going to like this stock because there are people out there who they actually do care about the stocks that they invest in, and they're not going to invest in gambling stocks, or some people don't like tobacco stocks. So this is the Lottery Corporation. Not going to appeal to everybody, but I actually do like how it's set up.
You'd like it if you get the 8 numbers on the Powerball. That's
absolutely,
that much.
yeah. So, so looking at the way that we've seen this reversal here in this area, you can see that there's been a nice reversal out of that low in 2022, and then the confirmation of that was a nice strong bar moving up. Always wait for that confirmation of these reversals because you can be tricked into them. And then we saw 4 or 5 months straight up from that, a decent pullback into this low to an important level which a lot of traders will recognise if they have a look at it. But at the moment, this could be a potential double top that's sitting there. I mean, it's confirmed at one point that it was. It doesn't mean that it will be. It could just be a resistance level. And this more recent move is actually telling us whether that's the case or not. So because it hasn't fallen away strongly from here, there is a potential that we're going to see this starting to move around. And because of where we are in this boom phase of the market at the moment, this is often the time for these types of stocks to do really well, these consumer discretionary stocks at this point. So, but a move above this high here, or any of these bars here, strong move, and that's probably about 525, 524. We could see it take off to a new all-time high. So look, and if it does, you know, that's a nice little correction there. So it could lead to, you know, prices around the $6 mark, just as a stab.
Yeah. Oh, look, I think it's one of those stocks that doesn't have much history, and you know, it's been around a short time, but it is trading now back above its float price, so it's an important marker. So I'm with you. Keep an eye on it.
Yeah, I'd also look at, you know, some of those stocks in that top right-hand corner of that ROG, because you might get secondary buys into those because they're already trending really well. So don't forget about those. So if you're one of our students, bring up the chart yourself and have a good look, and there might be some good opportunities there. But that is it for our thoughts on an RRG on the consumer discretionary sector. But before we get into our first email, remember to get your questions answered live on air. You will need to text or call into the show. But you can also send your questions to info@wealthwithin.com.au, and we'll answer them in next week's show. Now let's get into our first question. Now we have a question from Aman on stocks getting delisted. He writes, "Hi Dale, Janine and Phil, could you please give some insights into why any stock gets delisted and what happens to the shares held by retail investors? I recently came across the Volpara Health stock, which got delisted from the ASX in May 2024, 15 months after winning US contracts worth 11.3 million. Question 1, why does any company get delisted even after big money is pumped into it? And number 2, how can a retail investor protect their capital and understand the signs of a possible delisting? Looking forward to your valuable insights, Aman." Now I'm going to go to you, Janine, because you've had a lot more experience in this.
And look, I never like to hear these sort of things because to me it just sounds dodgy. So I'm with you, Aman. It's you know, the fact that they've raised all that capital and then it's possible either takeover, it sounds like to me, without having done all the research on it. But you know, that sounds like all of a sudden they got cashed up and that's what happened. But often when these things occur, prices jump up, so shareholders get a higher price anyway. So it's not like, you know, the stock's delisted and you lose your funds. You will get paid for your shares, but you know, it depends on when you bought, whether or not you're going to make money out of that boost in the share price. So
yeah,
I thought we might have a look, just out of interest.
Have a look at the stock.
Just at the chart, yeah. Just to
Well, you
see
might
what
not see it now. We haven't got the data if it's been delisted.
No, we've got it.
Okay.
Yeah, so we actually put it up there, but you can see how it's jumped above that high there, which that's July 2023. And when a stock's being taken over, you know, you tend to see this sort of like sideways move until the takeover occurs. So, you know, it's a shame for some shareholders. You might have been holding it for a while. Perhaps you're in loss. You've got no choice. You know, it's taken out of your control.
Well, there's no risk from an investor's point of view. I mean, I know I've been in a stock that's been taken over and delisted. So there's a couple of reasons. Another company comes in, buys all the shares, pulls it off the exchange because they absorb it into their company, and you'll get paid whatever the price is that they announce, which means, like in this case, you'd probably be in a profit if you bought in the right spot. But the other times is a major shareholder slowly keeps accumulating shares and eventually they want to take over the whole share and delist it, and they do a compulsory acquisition. So it's another scenario I've seen a few times when on some different stocks. But I wouldn't talk about it as a negative, Aman. It's more of a positive thing. Yeah, it's sad that a stock that you may be following or you may be in gets delisted, but you will get paid for it. Don't you worry about it at all. Now, Rod writes, "Hi Dale, Janine and Phil. I've been keeping an eye on INR for the last 2 months. It peaked at 25 cents and as low as 14 cents. With recent news, it looked like it would start to go up by a fair bit, so I've jumped on board. Do you think this is likely to happen, or am I missing a crucial bit of information on this one?" Rod, you want to take that one, Phil?
Yeah, sure. All right. So what we'll do, we'll bring up the chart of INR to have a closer look for you, Rod. But I mean, first off, looking at the monthly chart here, it's, I mean, getting in on it. The question was, have I missed something here? Well, quite a bit, to be honest. And the reason I say that is because, you know, we always talk, we've shown on this show time and time again, trading stocks at these levels under $1, they are quite volatile, quite tricky to trade. They do require a lot of experience, and that's not to say that you don't have that. You could have that experience, but the way you're looking to pick up price as it's free falling, to me, is a big no-no. We always talk about trading on confirmation. Trying to buy falling stocks or trying to buy dips is a low probability game, and so I think you're probably going to end up with a situation where it's going to continue to fall, and it may find support. There is potential support around these levels through here back in, if I can get my mouse cursor to work for you there, but there is potential support from the significant low in 2020, and it may come back to these levels, but there's two things that may come back and then go sideways for a whole big period. And just one look at the chart, since making that all-time high, it's still in a long-term downtrend. So I would not be looking at this stock to be buying it, nor already in it.
Well, to me, there's a couple of things with Rod's strategy. He said he's watching it for 2 months, but he didn't say analysing it for 2 months or back testing or coming up with a strategy. But he also didn't tell us when he bought it. So I can only assume if he was watching it for 2 months, he's possibly bought it before the fall.
Well, I think it's recently.
That would be my guess.
Yes.
And so that's why he's emailing in going, well, is it going to go back up again? Because normally they don't email us when they're making gazillions of dollars. It's normally when they've made a mistake. So do you think somebody should have been buying that stock at the moment, Janine? And what do you think, if they're in the stock, which Rod obviously is, what do you think he should be doing right now?
Well, no to buying it right now, given it's a catch a falling knife
he's already
scenario.
bought it, but was that a smart place to buy it?
Look, I'm not going to rub, salt into the wound.
Well, you said you were going to be bad cop tonight.
Well, no, I'm not. I'm actually, I can totally feel for you on this one. And so from my point of view, I'd be looking at that saying, okay, how do we recover from this right now? And what's the exit strategy right now? So to do that, I need to go to the weekly chart. And you can see there that the pullback, it's still orderly. Last week's close, I don't like this low down here. I'm just going to expand it. This is just not great at all. Prior to that, there might have been a nice little recovery. I'm just going to check something here on the chart. Where is my little, no, I can't see one there, but look, I'll just grab this here. I just want to see how far it's fallen. So it looks like it's fallen about 50% from that high, which, there's a possibility that it could find some support here, but you're into real high risk territory here. So choices are, you either say, cut the losses, I made a mistake, not good timing, and exit and find a better stock, or you watch this low here, see if it can find support there, accepting that you've made a loss, draw the line in the sand and say, this is all I'm willing to give up on this stock, whatever that is.
Well, he probably hasn't got a stop loss on it, and otherwise he probably would have told us, and if he had, he probably would have been exited already on a stop loss. So that's probably my biggest piece of advice, Rod. Make sure if you buy especially stocks like this, these small cap stocks, always set a stop loss so that you make sure you're protecting your capital. Now, Andrew is asking about ASG. He writes, hi to everyone. Could you please give your opinion on Auto Sports Group? It is coming off a low, and I think it could be a medium-term hold getting to $3 or $3.50. I don't currently own any shares. They had some trouble with stink bugs, so incurred increased wharf fees. What are your thoughts, please? Andrew, well, how about you, Phil?
Yes, I
stink bugs.
Don't know too much about stink bugs, but I know much about the chart. So let's have a look at the chart for you. And look, instantly, thank you for marking that up, Janine. Janine's marked up this horizontal line here, and that to me, this stock presents a really clear line in the sand, or scenario, if you will. And to me, really, what's happening right now is it is in an uptrend. Since making that all-time low in March 2020, the stock is progressively moving higher, but it is stalling at around these highs, or the all-time high around $2.67. So if you are holding this stock in the medium term, there is, I guess, this momentum supporting it right now. But if this stock fails through this momentum and continues to fall away, I would be perhaps, I guess, favouring further falls. But like we showed with QBE, when stocks find go to levels, and a lot of people will be looking at them and saying, oh, it might be resistance, but it's clawing its way back to that $3 like a magnet. So I think at some point, if it can give you, I guess, a bit of period where it holds through this level and breaks through, then I think your target of 350 in the long term is definitely achievable, because there's not much history on this stock. There's the float price. It's come down. Stocks often do this when they float. They come down, find the low, and then make their big long-term run. So, look.
Is that second high higher than the first one over here? Yeah.
Yeah.
Which one's higher?
So the second one, but regardless, it's that level, or to me anyway, it's.
So you're saying this one here, that one there, is higher?
I'm just saying right now, this stock, obviously it's the $2.70 or $2.80 level is one that you need to watch, and also you've got a nice marker in this.
That's a critical piece of information, right? Whether it actually got through that prior high or not. So 277 versus this one here is 277. So they're actually equal. So the second one's not considered higher. So therefore, to me, that's even, that's worse.
That's a pretty strong level.
In my opinion, the fact that if it had have got through there, even by a cent, then I would have been more comfortable with it. But look, it could, like you say, that level could be, that angle could be nice and could hold it, but it could get squeezed up into this sort of corner here before we know whether it's going to go.
Well, the question is, obviously, that's what Phil said and what you said, that's a pretty heavy resistance level. So if he's looking at a target of 350, which Phil said is possible, is it worth even getting into it on a $3 stock? Because it's got to get through that 277. But if breaking through it, is that the buy, or is there some sort of signal that you want above that level to make it a buy? And then is there enough upside before it hits more heavy resistance? That's the question, really, isn't it?
Yeah, you said it perfect. That is the question. It all comes down to right now where the stock is positioned, how you're going to trade this stock. Is it going to be a short-term play up to that $2.77 level potentially, or are you going to go the safer route and let it break through 277 and then see what it does on the other side? Because you always get second, third, fourth opportunities with these stocks. So, I mean, yeah, said it perfect.
Yeah, as I said, to me, it's, Andrew, you've got to weigh up that risk-reward ratio, don't you? And
exactly.
It's a higher risk trade to trade it before that 277 level, so I do understand all that. And I think just take your time, Andrew, and really work out your strategy and make sure you've got solid rules around where you're buying, and obviously making sure you've got a stop loss anyway. Well, that is our take on ASG. Now, it's no secret that the All Ordinaries Index is trading around new all-time highs, and in part, this is being driven by banking, or should I say the finance sector, being bullish. So tonight we'll take a look at these big four banks to see if there's something you should put into your portfolio, along with sharing our tips on what's important when selecting a bank stock for your portfolio. But first, there's no denying banks provide an essential service to our economy, whether you love them or you hate them like I do. The reality is we need them, which is echoed in this quote. Banks are to the economy what the heart is to the body. Without them, there's no circulation of money, no growth, and no life. Now, banks being so important to the economy means governments and regulators will do what's necessary to keep them open. But they aren't just important to the economy. In Australia, the financial sector makes up over a quarter of the total market. And with so many people owning bank stocks, whether it be through super or direct investment in them, the health of our finance sector is crucial for a stable stock market. But this doesn't mean that bank stocks are immune from falling or even crashes. We've seen this occur many times with banks, haven't we, in the past, Phil?
Yeah, I mean, most recently 2015, during the Royal Commission, the banks fell 40%, which to some was a bit of a surprise, but they
over 5 years.
Yes, and I mean, even during the GFC, the bank stocks, like every other stock, fell. But yeah, they're not immune.
And that's the thing, is prior to that, people thought banks were just buy and hold, set and forget, go into coma, come back, make money. But it's not the same anyway, so you are right. What was interesting was that many people were shocked that the banks fell that much. And this raises an important question, which is, do we have a tendency to rely too heavily on banks and long-term investments? Now, I want to go to the Queen of Banking, Janine.
Yes, is the answer, purely. People do. They believe that banks are reliable, and so they'll continue to trust them. Banks actually are a big part of the cycle. They fuel the cycle. The whole property investment side of things is the bulk of their business, which fuels the whole market cycle. So, if you're thinking about it from that point of view, then you've got to have banks. You may as well get on there while they're going.
But are they too big to fail, or are they getting special favours that they probably shouldn't get that other businesses don't get? That's where I start to get a bit hot under my collar.
I think less so these days.
Less so these days. Oh, okay. I'd rather push up our second-tier banks and support them a little bit more, so we've got more competition, so making banking cheaper, because we spend gazillions of dollars on banks anyway. But now, as far as the banking sector goes, residential mortgages are a significant part of their revenue, as you mentioned, Janine. So before we go to the charts, Phil will share some fun facts about their market dominance.
Yeah, sure. So here's something I prepared earlier. Now, some big four fun facts. The first one, they are referred to the Australia's largest banks as the big four, which is Westpac, ANZ, Commonwealth and NAB. Two, they're amongst the most profitable banks globally, which is quite interesting given there are, some big banks out there in the world. And they also make up about 70% of the banking sector. So the big four are huge players when you're talking about the whole market space, and they account for 75% of all home loans.
So basically they're a monopoly, that's what you're telling me.
Well, in other words, yes.
Okay, well, let's take a look at each bank and their market share. Now you can see the graph shows the dominance of CBA and Westpac with over 47% of home loan, or of the home loan market. Now that statistic is interesting, but how important is it when choosing a bank to invest in? Should you simply choose the bank with the biggest balance sheet, which clearly is CBA? I know you know what the answer is, Janine, don't you?
Well, I have my own biases, don't I? But look, thinking about it from this point of view, you've got to actually look at the fundamentals, obviously. So first thing is, would anyone buy banks if they didn't pay such nice dividends? The answer is probably not.
Probably not.
And not have as many or not have as much invested in banks. So that's one of the best things to look at. The fundamentals are important. It's their margins. If banks have larger margins that they make on the money that they lend compared to deposits, if they can make more money, then the share price is more likely to keep going. It's more likely to be stronger. So we saw a situation a while ago where Westpac was actually doing quite well relative to the other banks, and it had some really good upside. But when the market starts moving up and the financials are going up, banks tend to go up reasonably well together.
Yeah, they do. Now I want to get Phil to take us through a sector map, as this is a great way to find other shares in the sector, as it shows a breakdown of the sector based on market capitalisation. Do you want to take that away?
Yeah, sure. So on your screen now is a sector map, and we're going to bring up two, but the first one is a total sector map of the whole market. And this is on our Optima software, so you can see it basically gives you a really, really nice layout of all the different sectors on our market. You can see here non-energy materials. There's the financial sector, and we often talk about the materials and financial sectors being so important to our market, but just look at that. They pretty much make up half of the total market. And within the finance sector, you can see all of these, as I'm scrolling through, companies, right? And the size of the company relative to the market cap, you'll see they're higher or lower. Now I want to zoom in to the financials, and this is how we, gauge the size of these companies really from a very basic viewpoint, but it's so powerful. And there's ANZ right there. If you're thinking that whole white box is the whole financial sector, ANZ makes up that portion, NAB makes up that one there, and then you've got, look at that, CBA is almost a quarter of the whole financial market, and then you've got Westpac. So, them four alone make up a huge chunk of the financials.
About 70% you said before.
In terms of the stock market, that was more loans and, real, but it's...
Just checking to see whether you remember what you said.
Yeah, it's about 65, I'd say. It's not far off, to be honest.
Yeah.
Yeah.
Sounds I was right.
Yeah.
I'm always right.
That's a really interesting diagram, isn't it? Just to be able to see, I can have a bit of fun with this, just having a look around. You can see some Suncorp and some of the smaller ones in there, and Macquarie. It's nice to see Macquarie in there, but yeah, I get excited when I look at these sort of things.
You said you were going to do two.
So this is the financials. We've gone through both of them.
Okay, gotcha.
Yeah, it was a quick...
It was too fast for you.
It's too fast for me. I'm a bit slow anyway. Well, we all know Janine loves banking stocks, so let me ask Janine, if you had to pick one thing, what would be the most important questions our viewers need to be asking before they actually invest in banking stocks?
One? Gee, that's tough, isn't it?
I know it's hard for you.
It is. Okay, so the one thing to think about is how long can I actually hold my bank shares for? That's the important question. And if I'm holding them already, or how long can I think about investing in them for? But if you're holding them already, can I continue to think the way that I did before about holding them long term? Because the issue you've got is where we are in the cycle at the moment. So if there's only a couple of years left in the cycle, banks tend to lead the charge, and so you've got to have some shares. So it's a good time to be holding banks, but they also represent a risk to you, because if you become complacent about it and you continue to hold them and you're thinking that they're going to be okay, well, the answer is they won't. We've seen that happen time and time again through every cycle that's unfolded. So, 50 to 60% falls in the market means that banks are going to fall that sort of degree.
So you're saying get the whole long-term buy and hold banks forever is just not on anymore. That's what you're saying?
No, so pick your timing. That's the thing. So when there's been a major correction in the market,
even in the super fund,
which we will, even in your super fund, these days you can actually switch out of your super fund, and that's a really good point you raised. So you've got to be thinking, coming into this point of the cycle, that you're at an advantage to be watching the show and hearing this stuff, because it's preparing you for what's ahead or what could occur. So if the market does fall 50 to 60%, then think about this. Think about, well, do I really want to hold on to my bank shares through that fall? Or can I find the appropriate point to sell them and then buy back in when they're cheaper and hold them for 4 or 5 years from there?
Okay, so the banks aren't so super when your super is falling. That's what you're saying.
That's a good way of putting it.
All right, well, it's time to go to the charts anyway. So you want to bring those up, Phil?
Yes, so we've got a watch list right now of the banks on your screen. And look, to start things off, real interesting, obviously the big four are there, and some of the, second tier, the Macquarie, the Suncorp, Bendigo, Bank of Queensland. To what screams out to me initially is obviously, as you said, Janine, fantastic dividends across the board. They pay great dividends, but look at the PE ratios. Now, when we look at PE ratios from a fundamental perspective, we're looking from anywhere between 10 and 20. And given the way these banks have run, they're still printing pretty good PE ratios, meaning that they're not overvalued from a fundamental perspective. So that, I guess, speaks to what you're saying, that there is still opportunity.
Well, some you could argue are, given Commonwealth Bank's at 23.
What's thereabouts?
What's a few points between friends?
Macquarie's 22.2, but they can be upgraded, can't they?
Well, I mean, Macquarie is a different type of bank. It's not like the big four. It's not a big retail-y bank. It's a whole different beast, Macquarie, and so you've got to think its P ratios are going to be out of whack with the rest of me anyway. But I would suspect, given what happened last time before the GFC, Macquarie's going to take off like a rocket. It's probably going to outstrip all of the other banks, because that's what it does. But it also crashes harder, doesn't it?
It definitely does.
Yeah. So have you got any stocks? I mean, obviously you're going to talk about the big four.
Yes.
But the second tier banks on that watch list are performing very, very well. So don't forget about those as well. But I know you've got a few that going through all of the top four. Sorry?
Second tier banks, that's for another show.
Oh, we're going to save that
We just gave people a bit of a sneak peek on the fundamentals.
All right, so let's bring up our first bank, which is which bank?
Well, before we do that, can we just have a look at this relative comparison chart? So it just shows all of the banks there that we showed you on the watch list.
Yep.
And it shows them in terms of how they're performing. So we can see here that CBA has done quite nicely. That's this one here, and is still pushing up strongly. Ben is just starting to turn down a little bit. NAB's pushing up strongly as well, and Westpac's doing the same. But the ones that are sort of out of step at the moment, this is where the opportunities could be. Suncorp, Macquarie and ANZ, Bank of Queensland. I'd say those four could provide nice opportunities, given that they're not keeping the pace of the others at the moment.
I think you're right there.
But we're going to look at the big four, like
Okay.
you've been asking.
Since you insisted.
Okay, all right, let's look at the big four.
All right, so first up, let's go to Commonwealth Bank. Now, I mean, what do you say about this stock?
Up.
You can't argue, can you?
It's
150, here we come. It's just 135 at the moment. It's at one of the resistance levels for this stock, so I think it might go up for another couple of weeks, and then we'll see it pull back from there.
But I mean, would you be? I know it's a hard question to answer, I guess, but the way the stock is right now, would you be looking at it as a buy, or, I know we have our
Not right
technical.
But you'd wait. Yeah, I understand what you mean.
you
But I
know?
mean, if you're
You
not
could
in
catch
it,
this on a pullback,
that's
the
what I was
thing.
going to say. Because and you never traded through the peak or the run through to the 2007 peak, which Janine and I did. And there were stocks like this, and we did a show only a few weeks ago on our stock market report. About 3 weeks ago, we brought up a lot of stocks that we said, would you have bought this now during that run up to the 2007 peak? And we went, wow. And so this looks like, oh, it's gone too hard, but
So it's
wait
the
for it to
same sort of thing.
Yeah, it's the same sort of thing we're seeing now. And if we're going to be bullish in our market and finance is going to be bullish, banks are going to lead the charge, like you said.
Well,
There's
they
gonna be
already are.
periods of
I'm just
consolidation.
waiting for the miners now to turn around and
Well,
kick
they are.
up.
So we just need to wait for consolidation or a little bit of a pullback to show us where the sellers are, and then go in after that. So I think there's plenty on the banks.
And that's the beautiful thing when you do have companies or right now Commonwealth Bank showing you these really strong trends. The strategy is very, very simple. Just get a nice little correction, and they happen time and time again. When a stock trends, we know it forms those higher highs, higher bases.
Surfing the waves. That's all
So,
I'd
so
say.
the
Easy
message
trading.
at the moment is just to sort of, if you're in Commonwealth Bank, obviously you're going to hold it. You can use a monthly chart to manage it, but if you're not in it, I'd just wait for another month or so, probably peak out, and then we get a pullback, and then you'll be able to get in another opportunity.
To me, that's a really good point what you just said, using that monthly chart, because when stocks are, if you're going to keep it really fine and try to dig down into the weekly thinking, oh, it's run hard, I just want to capture as much as possible and maybe shorten the time frame, you might, I guess, chip into the natural volatility of ComSec, and that might get you whipsawed in and out of trades, whereas sitting on that long-term chart on that monthly, you're going to ride the majority of that uptrend, which is very, very important.
Yeah. So the next stock?
ANZ's on the list. So if you have a look at ANZ, you'll notice that it's actually pulled back. So the last couple of weeks it's been falling away, which is nice. So I'd like to see it come back a little bit more, actually, ideally, and take out that trough there, consolidate a bit, and then we get another run up through this high. And once we get that, it could be a nice little opportunity again. But see, it's met resistance from this level once again. But if you look at how far we've got in terms of upside potential from that level to the high, there's still 20-odd% in it to the high. So
it's just lagging behind, isn't it?
yeah, so that's why that relative comparison chart is a good thing to look at, because it's showing you which is leading and which is lagging, and therefore which banks might play catch up. So ANZ's definitely on the list for that. Did you have anything you wanted to say?
Yeah, just with ANZ, I mean, just looking at it, drawing it from a momentum perspective, now more than ever, since it broke through in January 2024, it changed, I guess, that long-term momentum that had been holding it up. And to me, I mean, the fact that it is holding around these levels is more of a positive than a negative, because, you've seen, if we go on the weekly chart here, you see what this stock likes to do. It rises up and then finds its way to agrees on price, and we have these periods where I guess price looks a bit squishy, but what's happening is buyers and sellers are agreeing before then speculation goes and takes it higher or lower. And right now, to me, at these highs, what we're seeing is a bit of that happening, with price agreeing at these highs. And given the fact that it is agreeing at these highs, if it starts to break through $30, I think that this trend will resume and might resume quite sharply. So, you want to be prepared for the opportunity that ANZ is going to provide you.
Well, yeah, I mean, obviously looking at ANZ, and it's a more volatile stock than CBA and Westpac, and NAB and ANZ are more volatile than those other two, so they're different personalities as well. But I mean, we need to be, can I say, trading within our own level of knowledge and skill, even though they're the big four banks and they're nice big blue chip stocks. But with ANZ and NAB, I'd probably trade, if you're more of an investor, trade it on the monthly chart rather than the weekly chart. If you're a more experienced trader, then go to the weekly charts, because, I mean, it is looking nice, isn't it? Well, and it's way behind its all-time high, whereas CBA is making new all-time highs every single week. So did you want to say something else before we move on?
Yeah, that's a good point in itself, isn't it? Because, you've got all this blue sky on CBA.
Yeah.
But we know that there are a couple of really strong levels there around 140 and then at 150. So you've still got to be working out, okay, for a stock that's trading at 135, how far does it have to go for you to make 10, 20%, and then go and have a look at some of these other ones?
So whilst I might find some resistance at 135 or 150, it doesn't mean it's going to stop there either.
Oh,
but we'll
completely.
reassess it when it gets there.
Yeah.
So what's the next one?
Westpac Bank is the next one. Now, this one, again, very similar to ANZ. It is lagging. It created its all-time high back in 2015, and it's only really recovered about half, just a bit more of that. So, I mean, one train of thought, layman thought, would be that, hey, CBA's run hard, NAB's run, and then you're thinking, well, where would the opportunity lie? Look at ANZ or Westpac, because they might provide that, perception of opportunity, and maybe, the big end of town is also viewing it that way. But I mean, the fact that it's had this, why I like Westpac right now from a technical perspective is, again, it's breaking through these levels where you can see it held up the stock for a very, very long time. And we saw that, I guess, consolidation through here, which is quite normal. We saw that vacuum of price consolidating, and then that big break on up now. So now it's a question of how am I going to get in on this uptrend? It is quite volatile. One train of thought is that it is going to come back and settle perhaps to that natural gradient. But the way this stock does move, Westpac, you can see this run through here, and you can see this uptrend through here. It is quite sharp when it gets going. So, the trick right now for these banks is your strategy, really, to me. How are you going to get in on that best entry to not miss out on if it keeps on running, but then be placed in a good position if it does fall away. So,
but how much risk are you taking if we're thinking financials are going to keep running? How much risk are you really taking if you get in now? Like, really?
It's lower risk than buying other stocks, yes.
I mean, every week we get people emailing in and ringing in about cheap, crappy stocks that none of us would ever look at, and yet we're quite happy if they sort of buy one of these 4 banks, basically, now, because they're all pretty safe to buy. As long as you put a stop loss underneath them, you're pretty okay.
And we haven't even mentioned, they're paying 8-9% income.
Yeah.
So, throw that in on top. It gives you a whole nother buffer if you're looking at, perhaps, as you said, putting that stop loss even wider and letting the stock play out, having it more as a long-term.
Well, what I was getting at is a lot of people make their job hard than easier. Like, these stocks are easy. That's sort of what I was saying.
Yeah.
People like to trade these $100 stocks because they think they're going to 10x.
Yes.
And they ended up doing minus 10x. So, but...
Oh, you're 100% right. And the way it's moving, it's humming along.
All right, so we've got one more to go, yeah?
Yeah, we have. Just one more thing on that. I just want to go back and look at Westpac for a sec. You can see here that it has moved up strongly, and while we're thinking that there could be some short-term resistance here, the last time it did that, as Phil said, so we had this high back here in the GFC. It's just coming back to that level. So it may just, I'd be expecting it to sort of slow down around $30 and have a bit of a pullback from there before we get another move. But it did 100%. It had, after that little bounce out of that low, it did 100%. After a little bounce, 100%, it's near that high. So look, that's Westpac, looks interesting. NAB, looking at NAB, there's a lot more resistance around this level here, but it looks like it may have managed to break through, but you don't always know. Sometimes a stock will shoot through and then, turns back in the next week or so, or month or so. But it, right now it doesn't look like NAB's doing that at all, does it? It just looks like it's rocketing up to that high. But it still may meet resistance around this prior short-term high in April 2015. But just think about this, right? It's only just getting back to levels where it was pre the Royal Commission. That's saying something.
It is saying something, isn't it?
That's 2015. That's 10 years
But you got to look
to
at
get back there.
NAB is to business banking as what CBA is to home loans. So NAB's always pushed itself onto business banking. So you see how they've got the biggest business banking book. And obviously loans to businesses are there, and business loans, some of them are unsecured. They pay higher rates of interest, but obviously they do try and take the directors' homes and everything else to secure loans. But it doesn't surprise me if it travels along the same sorts of lines as the business cycles. If business isn't doing well, NAB's not doing as well. Whereas CBA is a bit different, being in home loans. People are always going to get a home loan. So, but anyway, anything else you want to say about NAB?
Well, I guess we should all vote on which bank we prefer at this point.
Well, I mean, I've been vocal at CBA for many months. So that's, I mean, well, why fight the trend and the strength? Where momentum, personally, momentum and volatility is what you're looking for as a trader, especially, and CBA is giving you that exactly. So why fight the strongest one?
I'd agree with Westpac as my second choice, but I think I'm going to be getting more excited about Macquarie, which is not a choice, I know.
Me too.
But I would be looking at Macquarie, so I'm looking forward to a show when we talk about that one.
Yeah, I like Macquarie as well. But I actually like Westpac. So I see that once it gets through this level here, I see that as having some really nice upside. And I can't help myself, I do like ANZ as well.
So we all sort of differ, but we're all the same too, like same but different stocks. Anyway, thanks for that, Janine and Phil. Now stay with us as we'll be right back after this short break. This week on Talking Wealth, join me and Andrew Griffiths, Australia's #1 small business author, as he reveals why every business needs to become financially future-proofed.
You could be fully booked and you're still not making a profit. Do you realise that? We go, no, that couldn't possibly be true. And you go, the numbers don't lie. You've got to do something about it.
Join Mike Bainbridge as he advises retired athletes on managing wealth effectively post-career.
When you talk to the everyday person in the street about retired footballers or retired basketballers, and they say, oh yeah, you earned so much money, but geez, you just lost it all. But no one's bothered to say, could we have stopped it?
Can the All Ordinaries hit 10,000? Rod North explores this bold prediction and what it means for your portfolio.
There's probably no better time to look really closely at the share market than now. An index of 10,000 is a real possibility over the course of the next few years.
Get your free 7-day trial now to watch this and more on Talking Wealth. That amazing content you just saw is going live this Thursday on Talking Wealth. Now stay tuned to the end of our program tonight to learn how you can access Rod North's interview titled Investment Clock Is Now a Good Time to Buy or Sell Shares, completely free. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 929 09988. That's 03 for Melbourne, 929 09988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Now, Praveen writes, hi, Wealth Within team. What are your views on the share price of AML3D based on its performance thus far? What key factors such as possible buy, sell, market volume and depth should we look for in such a small growth stock? I'll go to you.
Yeah, all right. So let's get to the chart of AMLET or AML3D. And look, again, one of those stocks that is hovering around 16 cents. So not much history on this one. It's obviously coming off a big run through since floating, falling back down, which you often see. Now trying to find a base. So again, he raised some good questions, and I guess the first thing is you want to address what is the, I guess, liquidity with this stock. Should you even be looking at this? Is it liquid enough to be trading?
Well, because of the price of this, the liquidity is going to be all over the place.
Yeah.
Some days it's going to be good and some days it's going to be SHIT.
Exactly, which poses a huge threat to you being able to enact your strategy that you have. But anyway, going back to the chart.
He's asking us for a strategy, though. I think that's for buy, sell and everything else, which he's not going to get because you've got to be a really highly skilled trader to trade a stock like this. And by asking these questions, Praveen's not a highly skilled trader, I can guess.
And also on top of that, I mean, there'll be the movement will change week on week. There'll be new information coming through, and we won't be here to tell you what we think, whether we've changed our minds or what have you with the stock, because that's what happens when you're trading a stock. You're following price with the new information coming through every week.
It could be like Gerard and email us each week.
Oh, maybe. But just look, I mean, look, going back to the chart, it's quite interesting because I just want to pick up on one thing. And if you are looking at this stock, obviously it's found huge support at 4 cents. It's had 3 attempts at it. It's had this big spike now, which is probably driven by some kind of announcement. Big volumes come in. But what you are presented with right now is, given it's taken out these levels through here, so it's taken out that high through there, and also the September high. What it's done is it's broken through to new highs since August 2022, and now it's a question of, we see the green, we've seen what the buyers have to offer. So I would be waiting to see what the sellers are going to present right now, because knowing what they offer you is going to give you that signal as to whether or not or how strong they are, and whether or not you should be looking at an opportunity or potential opportunity. I mean, that'll be the first port of call, but again, be very, very careful with trading these stocks because they present more headaches than
But I can guarantee you this stock's talked about on a chat forum. Some chat forum that people go, wow, volume's up, blah, 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 it's gone and doubled or tripled or whatever, the price went up. and it's got on a chat forum, and then a lot of people have now, all those bars the last couple of weeks where it's been a little bit more sideways after the big spike, is where it's all coming up on the chat and people are going, wow, I did this, let's get into it. Hopefully I can do the same again because it'll run up again. And the ones that got in early, they're going to be selling to them and getting out and taking their profits and leaving the risk to those who are getting in late. So I'd be picking another stock if I was you, Praveen, based on what Phil said and what Janine said. But moving on, John is asking about Pinnacle. He writes, hi team, I've been looking at Pinnacle Investment Management Group. I initially started watching it after the entry at $12.10, but must have fallen asleep because I missed another opportunity around $13.48. Very frustrating as it has now reached a resistance level around $16.18. The volume looks good and it seems to be repeating a nice pattern similar to the move in April 2020. There still seems to be some upside potential, but I'm not currently in it, but I am considering a medium-term position whilst waiting for another entry. Now, Janine, Pinnacle, what do you reckon?
Well, look, I think he's right in that he has missed it. So, I mean, I've put a dashed line, you can see on the chart there, a solid black line actually, of where this is the week where the opportunity was. That was May 2024. So that would have been a pretty clear entry, having broken through all of that to get in. So, you know, that can happen sometimes. You get busy and you know, for whatever reason that you've taken your eye off the ball, but I don't think the opportunity is gone completely. I would just wait. But one thing you have to bear in mind is the fact that you're right, that this sort of stock can take off and then it just does nothing for a long time. So it's more than likely going to break through that all-time high, I would say. So you've just got to weigh up whether to wait for a decent pullback and then factor in how much upside potential there is to the high. So there's a decent amount to the high even from there. If it does pull back from here, you may get another run at it. So look, I would just be patient.
It sounds like that is what he's doing. He's being quite patient on this stock and looking for a good entry for himself, not just jumping in blindly.
Which is wise.
So I think John's got it nailed. What do you reckon?
Yeah, I think he's got the right attitude.
I think John's also a Talking Wealth member, so he's got a doubly good decisions on that one anyway. Now remember to show your support for our channel and smash that like button now. Now we've got a question from, I'm going to try and say your name, Drew hopefully I've said that correctly. He's asking, dear Wealth Within team, I'm a young trader who recently started investing in the stock market and would love to get your thoughts on the following: TG6, AZL, NEU, FBR and DXB. Currently I hold these stocks and would like to know your opinions on them. Additionally, I would appreciate any advice on key factors when considering buying stocks and how to identify potential red flags to avoid common mistakes and how to generate more profits. Now I know exactly what you're going to say, Janine.
Well, no you don't. The first thing is we have so many podcasts on our website that can help him with answering a lot of those questions, but more in depth than what we can possibly do to help you here. So I do a bit of research on our website first. The second thing is, you know, if he's thinking this way about all of these stocks that he's looking at on his watch list, there's a lot of stocks there which are not for a beginner.
Yeah.
That's the first thing I would say. But I would love to have a go at all of them, only I'm not allowed to. My hands are tied, mate, so sorry I can't help you there. But we can look at one, can't we? Yep,
we only do one. If you're putting multiple stocks on, we do one, and it's always the first one that you list there. And the thing I thought you were going to say is buy my book. That's what I thought. So you still get my first book for free, just got to pay the shipping.
Hang on.
That's all you've got to do.
I've always wanted to do this.
That's not my first book, that's my second one.
Buy this one as well then.
I'd buy this one. But that'll teach you all the questions you had, you'll learn in the book, so please do that. But I'll get Phil to bring up the chart and have a talk about the first stock.
Yeah, all right. So we've got TG6 or TG Metals Limited, and yeah, look, you're a young guy, you're getting into the market, so good on you for that. And fantastic that you are taking this route with your life, but you'll soon realise that trading the markets does involve being educated and knowing what you're doing, and that's the first thing. So you'll either learn it from the market or you'll go and source it somewhere. Picking these stocks, the market's going to teach you very, very quickly. what's at stake and
So you
how.
don't like the stocks he's picked for his portfolio?
I mean, yeah. Look, it's
Can we have
very.
a look at the second one?
he's
What
a-
was the second
No, we
one?
don't know.
He's a young guy, so it's normal. You know, it's quite normal. You've gone down this route and you've started off looking at these stocks. I was very, very similar when I started out, so no issue in that. But you will learn through time that there are ways of doing this correctly, and if you do want to do it correctly, you will slowly start to see either from your mistakes or, as I said, going to get educated and do it the right way, and you will learn that trading stocks like this are not, I guess, or are fraught with a lot of risks more than anything, and they do require a lot of experience. So I wish you all the best on your journey, but right now, looking at this stock, I wouldn't be buying it, no.
Yeah, that's it, Drew. I'd just stay the top 20, top 50 stocks. That's what I'd stay anyway. But if you enjoy watching and you want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now we've got a question from Daniel on SDF who asks, hi Dale, Janine and Phil. My question is about Steadfast Group. I don't currently own the stock, but I've been watching it trade sideways for the last year. I like how it's in a long-term uptrend and the last 2 months have been really strong. If it can finish this month strongly, I would be interested in buying it. I would just like your thoughts for the medium to long-term on the stock. So do you want to take over, Daniel? Daniel's question?
Yeah, sure. Great question and great stock. I totally agree. I mean, it is in a long-term uptrend. So if we have a quick look at the chart for you, you'll see that just recently it's broken through to a new all-time high. And I mean, just if we keep it to the monthly chart here, you'll see that if I put my cursor on, as the stock breaks through to new all-time highs, it does have the, I guess, potential to pull back a little, and we've seen moments through here, and again, now we're experiencing one of those moments. So it's not uncommon for stocks to pull back once they break through to new all-time highs, but you've got to factor in also that it has been moving sideways for quite a while. So it is normal, given it's moved sideways, it has expanded and expanded strong. So I like your idea of medium to long term because it is in a long-term uptrend, and trading it on that longer term gradient or perspective, you're going to avoid a lot of the noise of the market, making that trading plan a lot simpler. And if this thing continues to run on up, which I don't see any reason why it shouldn't for now, then you would, I guess, ride that all the way through, which is quite a positive. But I mean, if we just apply something like this, which is a momentum line, that could be your marker as the stock trails on up. And if price holds through these levels and starts to tick down through your momentum line, then that would be, I guess, a first sign of cause that maybe the longer term momentum is ending. Or if it starts to accelerate away very, very quickly, and be mindful of that as well.
Cool, there you go, Daniel. You've got 2 thumbs up there from Phil on what you're doing, so keep up with it. Now, Peter wants our thoughts on WiseTech. He writes, hi guys, I'm considering purchasing WiseTech for the long term if it confirms an upward trend after its current sideways movement. I'd appreciate your thoughts on this stock, Peter. So do you want to go to Peter's
Really
stock?
nice stock, great choice. I'm just watching it at the moment too, and look, it could take out this low, and I hope it does. That's the low in April 2024. It looks like it's trying to push back, but $100 is a psychological resistance level, is basically what's happening here. But if it takes off through that high, then it just could continue to make more highs. You know, $120 is not out of the question for this stock going forward. So I like it. Like, good stock choice, nice big stock, nice and liquid, trends well. Just consolidating at the moment, just be patient.
And he's looking at long term, it's IT, so I think IT is going to keep going, so I love it too. So well done, Peter, for picking that. Now, if you have emailed us and we haven't answered your email, we have had too many emails tonight to answer on the show, so check us out next week. If you have email, we will cover it next week. Now, we've got a special offer for those watching on YouTube and Facebook, but before we share that with you, remember to comment below and tell us your favourite part of the show or what that was. Now, if you want to access Rod North's interview titled Investment Clock, is now a good time to buy or sell shares, where Rod, Phil and I discuss the best time to buy and sell shares and the cycles of the market, which is really important, then click the link in the description below. You'll get access to his full interview on Talking Wealth completely free. Now stay tuned to watch the first 3 minutes of this interview. What is the clock, or what is the investment clock, and why is it really useful for us to understand where we are, and how is it going to tell us where we're going to?
Well, I'll just sort of take you back a bit in the story because, my father was a stockbroker for 40 years, so it was sort of in the blood. So I started buying shares when I was about 9, and then ended up doing an economics degree in university and, Securities Institute course, all that type of thing. Worked in share broking in the early days and came across the investment clock, which was on a piece of black and white paper, photocopied, on that paper that sort of disappeared after you had it for 10 years or something. And it was...
Phil doesn't remember those.
Don't remember
He's
that?
too young.
Yeah,
Well, no, the only paper I know still works.
None of that was any good, it just didn't last. But and on that was the image of the clock, which was from when it appeared in the Evening Standard in London in 1937. And I was pretty fascinated by it because I thought, well, look, you sort of need something to give you a bit of an indication of where you are in cycles, because we all know that investing is cyclical, and the last thing you want to do is buy at the top and sell at the bottom. You need to know where those sort of cycles sit. So it wasn't until much later on I thought, gee, I must revisit that. I still had that bit of paper, but it was very hard to read because it was disappearing fast. And then I thought, look, I've got to do a bit more research on this, make it a bit of a live thing, look at the various stages of the clock, moving through, recession to the boom period, and try and work out, where we are. And of course, back then, we had that stock market crash of 1987, which was a very defining moment. And I think it's good to look in the context of those markets because, back in, say, 1980, for example, 79, 80, when we had a resources boom, then the market was only like 1,000, the index. And then in 87, we got to 2,700, and then that fateful day, 19th of October 1987, which we all remember well, if we were around, market dropped over a couple of days about 50-odd%. That was a very defining moment. But the beauty of those sort of situations is it creates an opportunity, obviously, to buy, but no one wants to buy. I remember my wife's grandfather calling me that day, and he was about 92 at the time, saying, Rod, it's time to buy. And I said, well, look, George, I'm not sure whether the whole world's going to come to an end. Let's just wait and see. But anyway, he lived for a few more years and kept saying to me, I told you I should have bought, into all the blue chip stocks that,
well, it went up to 91, didn't it? From 87 to 91, it went straight up.
That's right, went straight up. So, and often it's when people fear buying that they don't buy. And that's probably the time to buy.
Next week in our main topic, we get into how to make 100% trading the top 5 ASX growth stocks that are ready to buy now. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck, and good trading.